can you tell us which were the years in these 25 years that has been the best in terms of making returns in the market? And why was that so? And how does the market currently look in terms of what you can expect out of it in the next 2 or 3 years?
First of all, thank you so much for having me. Appreciate it. It's a pleasure interacting with you. So, I would say that I would like to break this question into two parts. One is the broad markets as a whole, and the second are individual sectors which have done really, really well within the broad markets. So if I look back my own journey since 1991 till today, I would have come across many, many large themes which have done well. And there are periods in which they have done. Let's say, for instance, between 2009 and 2014, markets were in a terrible condition, but the market cap of pharmaceutical went up from 1 lakh crore to 10 lakh crores in that time, right? From 2002-03, when we really started building Reliance Mutual Fund, the whole market was in favor of economy-related stocks, power, public sector companies, public sector banks, EPC companies, etc. So that theme really, really worked well.
Right.
So I would say, if you are an investor, that is what you're looking for. You're not, and what has rewarded, at least from my perspective, is to stay convinced on the India story and not get perturbed with, 1 or 2 years of return here and there. Because the people who have been stalwarts and who have made money, even like the likes of Rakesh Jhunjhunwala and all, they actually stayed convinced on the market, and that's how they could make the money which they made.
Right. Were there pockets of years in these 25 years when the returns were outsized? Like, for example, when Reliance Capital actually grew in those 5 years between 2003 and 8, were there some outsized returns?
Of course, there were very outsized return between that period of 2003 and 2008, I would say. And this last 5 years, except the last 12 months, from the COVID crash, if I may call it, and the preceding next 4-5 years were really exceptional. So if you want me to single out one period out of these 25 years, then I would say this period was the best. And to give you a context, at the bottom of COVID low, our market cap was $1.2 trillion. Today it is close to $5 trillion.
Right.
So you have added close to $4 trillion worth of market cap in the last 5-6 years.
Sure. So which means that when you are at this high, does the next 2-3 years look good or tough for the markets in terms of returns? It's already been a not so great 15 months, right?
So, let me say that, market over a period of time will give you average returns. So if you have had an exceptional period of return, reasons will be something or other.
Right.
But markets will find a reason to take a breather, right? But over a longer period of time, I don't know what will happen in the next 12 or 24, honestly. But over a longer period of time, I would still say equities will continue to be one of the best asset classes to invest in India.
Sure.
And as we have done maybe 14-15% compounding for the last 25 years, I see no reason for that not to continue even for the next 10-15 years.
Right. Usually outsized returns that we speak of is when you buy a stock or a market at a low cost, or you latch on to an idea at a very early stage. And therefore you can make those, like for example in Divi's, you latched on to that idea much before people thought of CDMO, and today it's the second most valued stock in the pharma sector, right? So therefore, if you were to look at the Indian markets, they're not a very cheap story today. And especially if you were to look at the large indices, the index stocks, so as to say in Sensex or in, say, the Nifty, they don't have growth stories that were there in, say, 2003 and 5, right? And therefore, how would you look at the large indices, and therefore, are those indices actually relevant today to sort of judge the market?
So it's a very relevant question. Most people actually mistake ki bazaar kya lagta hai. And when you say bazaar kya lagta hai, you are essentially asking कि निफ्टी और सेंसेक्स का क्या लगता है. In fact, that is the actual wrong question to ask. Because at the end of the day, what will you do? But if I tell you that Nifty will go up 500 points or it will go down 500 points, unless you are a trader and you are really wanting to make money, you don't benefit out of those kind of moments. But what you truly benefit is what you rightly said, that if you are able to identify a right sector, and within that you are able to identify right companies, then only you make outsized returns. So that is what is true for Indian market. It has always been a bottom-up story. And people who have really made success out of these markets are not the ones who are looking at where the Nifty is going or where the Sensex is going, but the ones where these companies which have tremendous potential, you put disproportionate effort into these companies or these sectors. You identify them early. But more than identifying early, sir, the important thing is that when they go up 100, 200, 300%, do you have done enough research for you to hold on to those stories?
Right.
Otherwise, you will end up selling your winners.
Right.
Like what a typical investor will do, that is gone up 100%, let me book profit.
Right.
And then typically you will end up losing positions which have been loss-making.
Right.
So what is the real relevant thing is that if you have a winner, like what Warren Buffett did, he put 30% of his portfolio in Apple. That's how he made those outsized returns.
Right.
So any large or good investor will like to back the real winner. And those winners are few in life. So when you get them, you have to really back them.
So when somebody says that the Nifty is going to be at 50,000 or the Sensex is going to be at 1 lakh, are these just statements that to capture imagination, or do they really mean something?
Sir, 1 lakh भी होगा, 2 lakh भी होगा. ये कब होगा ये मुझे नहीं मालूम है. But ये तो इंडिया का जो growth story है. See, if your earnings are going to grow 15-16%,
right.
Sensex is a derivative of your earning growth.
Right.
And it has to rise. I remember I gave an interview way back in 2003 when the index was like 3,000, and the journalist asked me, "ये 30,000 होगा क्या?" You can go back, and I said 30,000 भी होगा और 1 लाख भी होगा. ये कब होगा ये मुझे मालूम नहीं है.
Sure.
So I can tell you that ये 1 lakh भी होगा और 2 lakh भी होगा. It is not an imagination. In a country like India which is growing, these numbers will happen. The question is that we don't know whether it will happen in next 6 years or 8 years or it will take longer.
Right. So one more question on the broad market theme only. That see the IT stocks in the last 25 years has really carried a lot of weight in the index, and they are at the lowest ebb right now. We don't know whether it's the low ebb also. So do you think that they will still continue to play a big role in the index stocks?
They have a weight in the index, but if you look at the composition of Nifty changes, so if I take last 25 years back, if there were 50 companies in Nifty 25 years back, only 17 of them are there today in Nifty.
Right.
And at one point of time, you would have not imagined what kind of companies will go really out for what reason.
Right.
So obviously next 10 years or next 10, 15 years, the Nifty composition will be very different.
Right.
Maybe the IT companies will be there. Maybe the composition will change.
Right.
Maybe the nature of those IT companies will change. Today
Right.
you can say that Policy Bazaar is also an IT company.
Right.
Or, Paytm is also an IT company.
Right.
We don't know whether the traditional IT companies will dominate the markets or some of the new age companies will come and dominate the markets.
Sure. So another story that's been playing out despite, I'll come back to the broader theme of this poor FI interest, weak rupee, but one of the star highlights of this market has been that public issuances in the market. You know, there has been issuances about 5 lakh odd crores that has come in this calendar year, right? And this is actually new capital raised from the market. Is it just transfer of wealth? Is it new money? How do you, as someone who's been investing in this market, see this phenomena of capital raised by companies?
So, in my opinion, this is the most significant thing which has happened in the market in the last 25 years. That markets have absorbed 5 lakh crore rupees of issuance, out of which 3 lakh crore rupees is actually the IPO, the QIPs, the preference issues, and this is the money which has gone into the companies. And roughly 2 lakh crore rupees is gone out of the market, which is basically the private equity firms have sold, and roughly 1,20,000 crore rupees is sold by the promoters itself.
Right.
I can tell you, 5 years back, we were saying 30, 40, 50,000 crore rupees raise will be a lot of raise. So this is kind of a new era for India. On one hand, that market can absorb 5 lakh crore rupees and can give 3 lakh crore rupees of growth capital. So if the companies have raised money, clearly the money has gone into the market. And in one way, even when the promoters raise money, directly or indirectly, it will come back to companies or in one form or the other. So markets have come a long age, and this is like the retail participation. The likes of my friends are sitting here, Nilesh Bhai, Sandeep. They are the ones who are enabling such large absorptions of equity in the market. It is happening indirectly through mutual funds, but by retail investors only.
Sure. So one allied question is that there's been a complaint that...
And I want to add, one of the reasons why we are seeing actually sluggish return in the last at least 12 to 15 months is because of this large scale issuance of primary paper on this kind of liquidity coming by way of promoter selling and by way of private equity selling.
Right.
Because that money which could have otherwise gone into the secondary market is getting more or less absorbed by the primary market itself.
Right.
And that is why, contrary to what people believe, that there is a bull market going on, there is a actually meaningful correction which is happening in the broader market, specifically in small cap and mid cap companies, which have really corrected. I was just looking at the list. There are more than at least 100 companies which are down more than 40% in last 1 year.
Right. I mean, you took away another question of mine, but I'm still going to ask you that. But before that, in this whole public issuance that has happened, there's a debate whether the OFS part of the issuance, where promoters are taking away the money and this meaningful money is not coming to the companies. I mean, it's correct that promoters want a sort of return for the investments and hard work that they've done, but also they could get capital into their companies when you have a growth story going forward. And there has been debate on this. The regulators have been saying that, oh, this is not the right way to do it. So what do you think about it?
To be honest with you, what is the value of my opinion on subject like this, sir? It's an open market. Anyone can buy and sell. And what is being done is legally. Even if I say right or wrong, it actually doesn't matter. And I would say promoter wants to sell, but investors have to keep their eyes and ears open as to what they're buying.
Right.
And to some extent, I must say, since I have come from the mutual fund industry, mutual funds in India, at least in the primary issuance, in my opinion, are doing a tremendous job of making sure that some of these valuations are kept under check. They are actually, and that is indirectly kind of benefiting the smaller investors only. If you see the latest issuance, like the Grow IPO happened, I am sure the pricing, maybe mutual funds had a lot of role to play. And there again, if you look at the regulator stand, that some portion of issuance have to be done to the local mutual fund. So actually you can't get away in any issue, any primary issue, unless you end up having some of the mutual funds by your side. So this is actually a very, very good check from a primary market perspective that mutual funds are keeping a very close tap on valuations and ensuring that they don't end up paying berserk valuation and berserk pricing, which is very, very good from a retail small investor perspective.
Right. But as an investor who looks at smaller companies, what would you think of a promoter who sort of takes the most money as OFS? I mean, would you have any advice to him in this sort of a market? Because you see that India has got a growth story, and therefore the company needs a lot more money. Is there an...
Sir, I think if the company needs a lot of money and the promoter is taking money, I will not touch it, honestly. But yes, if the company doesn't need money and the issue is done at a very attractive level, wherein the promoters are ethical and they are doing it in a very transparent manner, then it doesn't matter to me. Who is selling? Sir, हम लोगों का जो philosophy है ना, and I would say it in Hindi. My guru was Rakesh Junjunwala, and he taught us one thing: लड़की खूबसूरत है ना, तो ब्याने वाले बहुत आ जाएंगे. So we don't ever bother about who's selling or who's buying. We only bother about what companies in which we are investing. Do those companies have fundamental? Do they have returns? Do they have growth? Right. As long as they have growth, I don't care who's selling.
You just said about, a lot of small cap and mid cap stocks actually not performing well. But if you look at the November data, still, small caps and mid caps almost got 6,000 crores of net mutual fund money, which is after a substantial portion have been sort of sold off in those mutual funds by the same investor, almost half that, and this is more than large cap and large cap stocks. That's what the statistics show. So on the one hand, you say that these stocks are coming down. Does it show a sign of confusion? Does it show a sign of...
No, sir, this is a tremendous sign of clarity. And it is a sign that the industry and the whole ecosystem is evolving. And I would say to the extent that they are doing the right things. Because if there is this kind of correction, then this is the best time to put money in companies and stocks which have corrected. Right? So if there are so many companies which have fallen 50% from the peak of last 1 and 2 years, there will be value somewhere or the other. Right? And this is the time to invest money. So I would say most people often say that the retail investors in India have not become smart enough. I would say they have become really smart. They are the one who have made maximum amount of money. The retail guys who have stayed invested. The fund which we used to manage, the 10 rupee Reliance Growth Fund is now 4,000 rupees. Just imagine a guy who just done nothing and just has stayed invested. Where in the world can you make 400 times return, even in 25-year time frame? Right? So my point is that money coming into small and mid-cap funds is a sign of maturity and smartness, and is not a sign of any confusion.
So, you were a part of a large regulated entity in the early stages of your career, right? And it came with a lot of rules. And earlier we had the SEBI chairman here. But now you're operating on your own. So what are the advantages and disadvantages of not being in a large system and being out there, being able to... Are there some advantages of actually looking at not taking, say, you can go up to 10% in a company just overnight. So are there advantages, are there disadvantages, and how do you navigate that?
First of all, sir, regulation has to be adhered in spirit. So whether I'm representing a large organization and I'm representing as an individual, I'm still regulated. And I still have to operate within the broad boundaries of whether a mutual fund operates or we operate. I don't think there is any change in the spirit of our participation in the market. The other thing is, the large setup has its own big advantages, that we have large resources, we have large access to people, we have large capital to play for. That is its own advantage. But see, my journey, I have enjoyed the markets, whatever format they were. So I enjoyed that part of the journey. That has its own advantage. Today I'm a free man. I can invest today. I don't have to answer anyone except my wife, who rarely asks me any question. I am not answerable to anyone that whether I am holding some share for 1 year, it did not give me any return. And we are able to buy any cap stocks. We don't have restriction. I can go and invest in a 200 crore market cap company also, and I can go and invest in a 20 lakh crore market cap company also. Right. It's a free way of operating, but to be honest with you, I have enjoyed that instinct as much as I am enjoying this one.
Sure. So today is a day of where celebrities interview celebrities, in the sense that, and they post it all over social media. And most of the investors also look at that. So how much time do you spend in social media watching these interviews, or how much time do you spend on, say, Twitter or any other forum to sort of get information, to know trends?
Honestly, not much. It comes a lot of, I have a decent team, so they keep track of it. So whatever comes to me in a very curated format, I do it. But I personally love to watch podcasts because they are a good medium and they are very, very relevant. So some of the podcasts, it will take 1 hour. So whenever I am traveling, I listen to some of these podcasts which are highly recommended by my team, and I enjoy that.
Right. So you said that, of course, Mr. Jhunjhunwala you said that he was your sort of guru. So where do you, what is the best thing that you learned from him?
So I think that just to say that he was my guru is understatement. I would say he was my friend, philosopher, guide, and someone who really taught me the difference between income and wealth. So if I have to single out one thing, before I met with him in 1998, 1999, I was a happy man, maybe making 3 times more money than any of my college mates were making, and I was very happy, right? But after I came in contact with him is when I discovered that this is not about making income, but this is about actually generating as much wealth as you can desire, right? So that is one fundamental change. And second thing, he taught us how to fish and never ask for a fish. So we had completely different portfolios. I have my completely different portfolio than what he had. Hardly 10-20% in common. But he always encouraged that, and he always used to tell me that, the only thing which I love about you, that you have your own independent thinking. Right? So we have learned all of these things, and today I proudly say, sir, that, and I tell it to all the younger generation, that I want to be a better version of Madhu Kela every day, rather than copying anyone. Right. I think if I can just keep on improving my own self, I am sure I'll reach somewhere. Right. But if I keep copying A, B, C, D, let's say I literally copied Warren Buffett, neither I will ever become Warren Buffett, nor I will remain Madhu Kela.
One of the strong points about your Reliance Capital journey was that you were able to assemble a great team of people, and several of whom are still there in Nippon. And I guess that some of them work with you also. So if you were to do it today, would that be possible, or is it very tough to create that sort of a team in this market?
So that was one of my biggest pride. And I would say that, often people give disproportionate credit to individuals. But it was not any individuals who won in Reliance. It was actually the team which won, right? It was the team, and we literally used to work like a family. All departments, we work like a family. And I'm so happy and proud that a lot of the good work which was initiated by us at that point of time still is carrying on in Nippon. And a lot of people who left Nippon have also doing really, really well. So I am very sure that we ended up doing something nice. So today, what I feel that, is it possible to assemble a team like that? It is possible. But in the younger generation, sir, people have become a little impatient. They want quick returns, quick results. In our team, we had a lot of patience. We stuck to each other for 15 years. Not a small time frame. Right. And some of them are still there. In the younger generation, this is the problem which I see, that they are very impatient. And they want very quick results.
Let's leave out Divi's for a moment. Apart from Divi's, what do you think would rank as an outlier idea that you discovered in the market?
So first of all, I don't talk about individual companies, but and that's a disclaimer that we are only talking it for educational purposes.
Right.
In my life, Divi's has been I think, if I may say, it's a crown jewel. And not because of the money which we made, but because of the person we discovered, because of the business we discovered very, very early on. Like, one of the very few companies which has not visited capital market after its listing, and maybe giving 5 times more dividend than what the company was listed, the whole market cap was. So it got listed at 140 crore market cap. They may end up giving 800,000 crore dividend in a year. So it was different company, but we have had many, many winners, sir, in life, and some of them have been, my recent big win is Wari, in which I invested. We invested in liquor sector. So we bought roughly 8-10% of Radico Khaitan at a few hundred crore market cap. Today it is a 45,000 crore market cap company. Right. So we have had many stocks which have given good returns.
One more on a stock idea, that which you thought was a great idea and you worked on it for a long time, but you never made money out of it?
Oh, sir, I have to write a book on that. I can't answer that question in 1 minute. So we have had our own share of hits, but we have of course had many misses in and most of those misses were because, I thought those stocks were expensive. And this is one of the things which I now tell people, that you should always have a very open mind in evaluating company. If you're only looking at one single track, that I want to buy companies which are below 10p or below 15p, then you may end up missing a very large portion of the market. Companies have different parameters to evaluate. So one of my true regrets is not participating in HDFC Bank. We evaluated many times, right, even for personal investment, and HDFC Bank made such tremendous success and tremendous return for investors, but somehow could never participate wholeheartedly.
Okay. Thank you. I think I've hogged all the time. There's some few more seconds for people to ask questions. So, yeah, go ahead, Justin.
Sir, what's your take on crypto? Do you hold any crypto? And, as an investor, we would like to hear from you on your views about investing in crypto.
So I think this is like they say, grapes are sour. So I must honestly, candidly admit that I have not invested in crypto. If you ask me, this is the thing which I was telling him. We should have definitely evaluated it. Forget after evaluation, if we did not participate, that was fine. But we did not even evaluate. हमको लगा ये क्या पता coin का क्या value होगा. The fact is that it has become billions of dollars of industry. So even though we did not make money, but there is a lesson that you should not completely give away any asset class which comes in front of you. Hopefully in future we'll be more watchful.
We have time for exactly one more question. Yes, please.
Following up on the question regarding the misses in your portfolio, the stocks that didn't end up working out. At sure, you don't want to exit the position too quickly. You don't want to have any sort of seller's remorse. But at what point do you acknowledge that, okay, there's some information that you've missed out on, and you exit, like you acknowledge that you've made a mistake in evaluating the stock and exit the position?
I think we are now more quicker than what we used to be in the past. So whenever I think your thesis gets broken, and when you realize that you invested in a particular company based on certain thesis, either about the industry or about the company financials or about the promoter or about the broad environment, and if you think that thesis itself is broken, then I don't care how much is the loss or profit, I'll get out. And one thing which we have changed, wherever we have a situation like this, we first square off our position and then we calculate how much we lost. Because if you keep looking at your losses, you will never be able to take that decision.
Thank you.
Yeah, thank you.
Thank you so much. Very
Lots of
nice
good
interacting with
insights,
you.
yeah.
Thank you so much. Thank you.